So welcome everybody, Stuart here again. Hopefully I say you can hear me. I can't actually hear myself in my own headphones, but hopefully it's all nice, loud and clear. This is one of I call this success in trading is just a mind game. It really is in my view, the business of trading is 80 or 90% psychological, and that's what I'm going to touch on today. There's some very simple numbers that you need to understand, whether you're a successful trader, a brand new trader, somebody that's struggling to get off first base, as I call it, or somebody that's been successful and then lost and doesn't understand why, or you've won and then you've lost and you don't understand why. It's all what's in between your head, and that's what we're going to talk about today a lot. So lots and lots of questions hopefully today. I do quite a bit of talking, so I apologise if I speak too quickly. Ask me to slow down if I say something you don't understand, because this is absolutely fundamental. This is, as I say, this is probably the most important webinar I do, in my view. It's only my personal view, but I think this is absolutely fundamental to understanding yourself and understanding success in trading. So let's get going. A few questions for you as we go through today as well. So let's get going. So usual issues with GoToWebinar, or if you can't hear me, email us at excuse me, webinars@hotforex.com if you've got any questions afterwards. Try restarting your GoToWebinar or your own device that you're watching or listening on. So quickly, the disclaimer: it's provided as a general marketing communication for information purposes, and it does not constitute, it's not investment research. Nothing here should or be considered an investment advice or investment recommendation, or indeed a solicitation for the purpose of buying or selling of any financial instrument. All the information here is provided, it's gathered from reputable sources, and any information containing an indication of past performance is not a reliable indicator of future performance. So you need to acknowledge that investment in Forex and CFD is characterized by a certain degree of uncertainty, and investment of this nature involves a high level of risk. You are solely responsible and liable for that. We as a company assume no liability for any loss arising from any investment based on the information provided in this communication, and this communication must not be reproduced or further distributed without our prior written permission. So busy old session today, so I won't run through this. Most of you have seen and heard me before. My background is in the City of London. I've worked for investment banks and retail banks. I've been trading and investing my own money for over 20 years. And what we're going to talk about today, these four key things here, and most importantly, this big one here highlighted: know yourself. So if it's probable, do it. I always say, don't overcomplicate things. Don't have too many indicators. Don't try and understand every single bit of news that comes out, and look at multiple time frames. Look at the higher time frame, the lower time frame from the one that you're trading on. But you've got to trade thing that fits yourself, and that's what we're going to talk about a lot today: knowing yourself. So my old little mantra is do what's probable and keep it simple. It's all in the numbers, and we're going to run through some simple numbers today. It's very, very simple. Lots of people don't believe me when I show them these numbers and are very skeptical, but honestly it really is that simple. So let's get going. So today hopefully you will understand how to win and how to lose. They're the same. It's the same coin, it's just different sides of that coin, and you've just got to be able to flick it and accept whether it lands up or down, win or lose, heads or tails, black or white, red or green, up or down, white or black or white. You get my point. They're both the same. You just got to accept that that's part of trading, that's part of the business. Stay afloat in the ocean of trading, I call it. So you've got to know yourself, and it's fundamental risk management. All about risk management, having an edge, knowing yourself, having a system, and understanding what's going on. Some key numbers, and let's just go back a bit. 5 key numbers, very, very simple. So today isn't all about technical analysis, indicators. That's all great. Understanding the news, that's all great as well. It's it's the boring stuff. It's understanding yourself. Keeps you in the market and stops you blowing your account off. You do blow account, or when you do blow up your account, and there's nothing wrong with that. I've done it many times, and I know all of the best traders will own up to doing that, because that's the other thing. You're not fighting, you're not trying to impress anybody. The market is ruthless, and the market doesn't care whether you're up or down. The market does what it does. So you're not trying to impress anybody. So of all the people in here, let's ask me first question: who's actually blown an account up? Who's actually emptied an account? And I've got my hand up already because I've done it the same more than once. So let's be honest. Again, you've got to be honest with yourselves, guys. Okay, a couple of you already keyed. Good. All right. And just this simple acknowledgement of it, or simple writing it down, actually you'll be amazed at how powerful that is as a psychological exercise as well. But by just admitting to yourself, yes, I've done it, and then take away how you've done it, and hopefully at the end of today you'll be able to understand why it happened. Why it happened, but also if it happened again, how you would deal with it, and how it could not happen again. And if it does happen again, that's just, as I say, just part of trading. Sorry, my phone's going off, and I have no idea why, but there we go, I've stopped it. Okay, many times somebody's put in here, so almost somebody's saying me, I did. Good. Okay, so let's crack on to the next one. So these 5 numbers, hopefully, and there's a little spreadsheet you can have as well at the end of the session. So I've written down, I could write 20 or 30 things I got wrong when I started and still do wrong now to this very day, 20 odd years later. Why we lose. These are my dirty dozen, I call them, the 12 key examples. And those of you that have put in, I've emptied an account, or those of you that have traded before and been successful and also lost money, score yourself on these 12 things I'm going to talk about. Most of you will have heard them before. A lot of it is absolute common sense, but we get lost in the hubbub of trading, or the rush to try and trade. Sometimes, you deposit your money, you want to get trading, you lose these key things, and it's these 12 key things are some of the reasons. And give yourself out of 12. I got 12 out of 12. If I'd written 20 points coming up, I would have got 20 out of 20 as well, because I could have written some more. So, at the end, I'm going to ask you again how you scored out of 12 here. So, the legendary Jesse Livermore, there is nothing like losing all you have in the world for teaching you what not to do. So, losing absolutely everything is a great teacher, and that's why money is so emotional, unfortunately. But you know not what to do. It's all right for listening to somebody like me telling you what to do or suggesting what you should do, but doing it yourself, learning by experience, like a little baby when it touches that fire or that hot radiator, wherever it knows it's hot. It's fascinated by the fire, but when it feels the pain of the fire, the flame on its hand, it makes sure it doesn't do it again. And it's just like that. It's just like emptying an account. It doesn't get any easier, but you know what the pain feels like. So these aren't in any particular order, but having said that, number 4 in my view is by far the most important. So number 1, too little capital. So you invest, not necessarily, it's not so much investing too little, it's expecting too much of what you have invested. So don't invest, say, $1,000 or $100 and expect to make $50 the next day or that day, or $500, make 50%. So think in percentages all the time as well. Too high expectations. Second one is the absolute killer, too much risk, and this is absolutely typical of all traders, experienced, new, successful traders, losing traders. You risk too much of your account. Very, very common, and it's one of my mantras, and those of you who heard me talk before, I talk about this all the time. You've got to reduce your risk. Keep the risk down. If you keep your risk down, you can help you keep you in the game, skin in the games. I read somewhere this morning, somebody was talking about when they were talking about hedge funds. Over trading, don't it's too easy to try, and don't trade to get even, don't trade to get your losses back. Just because you've lost, don't think, oh well, I've got to get that money back, I've got to do that. So you trade too much, you trade chasing a position, or you see something you've missed and you think, oh, I've got to get in there. Don't. And again, I did all this, risking 10-20% on one particular trade. When you do that, you've only got 5 chances before you empty your account, don't you? Simple as that. If you risk 20% for each trade that you take, you lose 5 trades, your account's empty. Bang! You've got 5 trades experience. That's no good, is it? You want to reduce that risk down to 1 or 2% on each trade. But the most important one for me of the 12 here is to not knowing yourself. You've got to look at yourself in the mirror and decide what sort of person you are, what sort of level of risk you can accept, and by far the most important. So there's no point trying to trade on 5-minute or 1 minute or in short-term charts if you haven't got the psychology to deal with that, if you haven't got the mental setup and the physical setup to actually deal with lots and lots of trades very, very quickly. Equally, there's no point in trading on at the end of day one trade, or looking at charts and only making a decision one once a day. If you're the sort of guy or girl that needs to be able to, wants lots of action, needs lots of quick turns, you can't hold a trade overnight, you can't leave it, you want to close it, finish it at the end of the day. So you've got to look yourself in the mirror and decide what sort of person you are. So you've got to really know yourself, know your risk profile. And there's all sorts of options, but you stick to the time frames that you decide best fit you. Because again, I chopped and changed all over the place till I found the thing that really suits me as a person. Trading without a stop loss, take profit. I see this all the time. It's a killer for thousands of traders. If you don't trade with a stop loss, ask yourself why. If you only take with a take profit, again, ask yourself why you're only taking with a take profit. The stop loss is a mental and physical get out. It saves you. And again, I say this all the time. It's an idea that you know how much you're prepared to lose before you even press buy or sell. So if that number is only 1% of your account, it keeps you in the game. It keeps you comfortable. If you're not prepared to lose 1 or 2% of your account on a trade, go and do something else, because you'll never get off first base. Okay. The one thing I found most difficult was number 6 there, and it was only after I'd been trained for about 6 months to a year, that I suddenly realised I couldn't accept losing. I needed to win, and that's what lots of people have a problem with, especially men, and it's to do with how we're built physiologically. Men have this, because we're built over millennia. The human mind has developed over millennia. We have always been, or the men has been, the leader of the tribe, or the caveman that went out and got the food for the family. And that's the issue we have. We have this idea that we've got to win all the time, and that's why there's lots and lots of wars in the world, because men can't accept losing, and they can't say no, they can't walk away. They've got to go to this conflict of winning and fighting, and I'll come on to that's one of the key reasons why women are much better traders than men, because they accept losing better, more, easier, and they risk less. So there's 2 key things about accepting losing and risking the amount of your capital on each trade. Women are better designed physiologically to be better traders, and there should be many more traders, female traders in the world than there are. So, and I'll show you at the end, how you can, accept winning only half, 60%, 50% of your trades and still make money. There's no other business in the world where you can get things wrong so many times and still make money. If there's engineers out there, or accountants I'm talking to, or bankers or economists, or whatever other business you're doing, you can't, an accountant can't get 50% of his clients' accounts wrong and still be in business, still make money. He'd get sacked, wouldn't he? An engineer who built a bridge that only worked 50% of the time, or a road that only worked 50% of the time, he'd be out of business. In this crazy business, you can still make money and get things wrong a lot of the time. The problem is accepting when you are wrong, and that's the killer. That's the real rub. Okay, and I found that really hard, because unfortunately, when I look at myself in the mirror, I'm a bit of a big head. I like to be right. I like to be, not say I told you so, but I like to be right, and that was the one thing that really held me back. As soon as I accepted that I was going to be wrong, and wrong a lot, and I was going to lose money, all that stress didn't go away, but it lifted quite significantly. It was just part of doing business. Okay? You've got to have a plan. You've got to write stuff down. Too many people just come into this business saying, I want to make money, Stuart. I want to be a profitable trader. I want to do this full time. What's your plan? Well, I haven't got one. Write it down. Write everything down. I say this all the time as well. You've got to write stuff down. Trading. I've seen trading plans that are 10 pages long, really detailed. That's too. It's too much detail for me. A 1 page is too. Again, in my view, is a bit too flimsy. You need 2 or 3 pages. What is your plan? Why are you doing this? It's no good just to say make money. You need a plan. You want to buy a house, you want to buy a car, you want to put the kids to university, you want to get married, whatever it is, put it down, because money is just an energy that allows you to do stuff. That's all it is. 8 is absolutely vital. Patience and discipline, again, something I wasn't great at, but I've got better at over the years, and experience helps me. But you've got to be patient. You've got to wait for your candles to complete. You've got to wait for all the things to tick before you enter a trade. You've got to be patient when you're actually in the trade to let it run. Don't be in it too quickly, to get out of it too quickly. You've got to let the trade run. You've got to have discipline. You've got to have patience. Okay, so again, 8. I've done all these things, I say, and many more. Timing was something, if I'd only got it then, if I'd only got in then. Poor timing. So that is a skill. That's something you can learn. Wait for the candles to turn. Wait for the moving averages to cross. Wait for whatever it is, the stochastics to turn. Wait for the oscillator to turn. Wait for it. Again, a lot of people give up too early because they haven't given their system or their approach long enough, and it's usually because they've risked too much. So taking 10 or 20 trades isn't really long enough to give you statistical confidence that your approach is correct or it's going to work for you. You need at least 100 in my view, and to give yourself 100 chances, you reduce the risk. Because if you're risking 5 or 10% of your account on each trade, if it goes wrong, or if it hits your stop loss, or you haven't even got a stop loss, so you've got no idea how much of your account is getting gobbled up as the market moves very quickly, you're not going to get that statistical data to say, well, this works or this doesn't work. You need at least 100 trades. So by only risking 1% of your account if a trade goes wrong, mathematically that's on your side then, isn't it? Because you could get 100 trades wrong before you'd emptied your account then. So each time you traded and you only risked 1% of what was left in your account, you could still get 100 trades wrong, couldn't you, before you'd empty. And that's a lot of experience, isn't it, compared to like 5 or 10 or 20 trades. And even if you empty your account, that's why I say emptying your account is not necessarily the worst thing in the world, and all the best traders have done it, and I've done it many times. Because you get experience and you get a record of how you feel when that happens, how you performed, why that happened, what happened, why did it. And again, that's all to do with records. Got to write stuff down. I have a page a day diary when I'm trading, and I'll draw a line down the middle of the page, and on the left hand side I'll write the trade I've taken and why I've taken it. Usually now it's my system's triggered or something's happened, but also years ago I used to write down how I felt about what was going on, and I still do that to an extent today, because you'll be amazed that all that background noise and nuance that's going on impacts your decision making, because that's all it is. You're making a decision. Remember, markets go up, down or sideways. That's all they do, and you can win or lose, can't you? There's only 2 outcomes. There's binary outcome, if you like you can win money or you can lose money. That's it. It's as simple as that. Black and white, I said before, black and white, red and green, whatever it is. And so, don't get too hung about whether you win or when you lose. It's just, I know it's easy it perhaps sounds easy for me to sit here and say that, but honestly, when that light bulb went off in my head, that's when I just relaxed completely and just, this is just a business. Enjoy it. It's good fun. And there's nothing quite like when you see your little setup. You've got 5 or 6 things that need to happen before you take a trade, and you've got 3 in line. And it's looking really good. The 4th one goes, and you're waiting for the 5th one, and the 5th one goes. Yes. Was that this morning on? I can't remember what trade. I think it was pound yen, or I can't remember what it was. But 3 or 4 of the boxes had ticked, and then it was a bigger one. I think it was pound yen. It went under the 200 period moving average, and so that was a big tick that I don't normally wait for on the 1 hour, but it just made the decision much easier. It gives you much more confidence when you get other things like that going on. So write it all down, okay? I know everybody says, oh, the broker sends you all the trades and everything, but write it down yourself as well. So on the left hand side I'll write it down, how I felt, what I did, why I took it, and then on the right hand side of the page I'll write what happened. I won, I lost, I gained, how I felt about it as well, what was going on. There were times when and you'll see a pattern forming with your records. You'll see you might be better at going long than going short. You might be good with the euro, bad with the yen. You might be great with gold, terrible with silver. All those sort of things will come out. Good in the morning, bad in the afternoon. Great on Fridays, terrible on Mondays. You'll be amazed how all that data's in there, and by writing it down you create your own personal encyclopedia, because again, As I said at the beginning, this business is all about you. It's not about me. It's not watching videos on YouTube. It's not, listening to or looking at charts, understanding charts and everything. It's principally about you. And so writing stuff down really helps you. And understanding, 12, the final one I've put up here, and again, I could go on for all day about this. I could talk for hours about this. But you've got to understand the very, very basics. If you don't, the market will take your money off you. It's as simple as that. If you don't understand what pip is, or the value of a pip, you don't understand the difference between a micro lot, a mini lot, and a full lot, and what implications of that are, the market will take all your money off you. If you don't understand risk management, if you don't understand leverage, how leverage helps you, but it's also a big issue as well, for negatively. You've really, really got to understand that. And those of you that are brand new, have a look at my video, which goes at the beginning of our video education series, where we talk about the basics. Really, you must understand those simple numbers: margin, leverage, stop loss, take profit, and risk management, which I'll repeat many times today. So, as I say, I could score 12 out of 12. I put some other slides on here because I was going to put some more on, but I could have easily written 16, 20 things that I have got wrong and done wrong. So those of you that have said you've lost an account, or those of you that have lost money, are those 12 things, what sort of numbers would you say you did of these 12 things you got wrong? Too much risk, too much capital over trading, not knowing yourself. So tell me, who gets 12? Anybody get 12 out of 12? Nobody wants to talk to me. Oh, 11 somebody's put on. Yeah. Nourish, can you start with $50? You can, but it's very, very difficult. Stick with a demo account, save up, and invest as much as you can. The Solomon's put on here, it seems that the moment I enter a trade reverse, I don't understand. Can you help me? Yes, that's a psychological thing, Solomon. That's all it is, your mind. 12, lots of you are putting 12 here. Somebody's put 7, 12. Bunny, please go to the first page. Certainly, sir. The first page being what? You mean the first numbers? Let's just go back. Right, watch it move. Come along. Up. There we go. That one. Is that the one you want? Back over. Okay, so as I say, I could have easily written 20 things, and I repeat this. This is why we lose. Once we understand why we lose, there's 2 steps. We stop losing, and then we start winning. It's as simple as that. Remember, there's only 2 outcomes when you press buy or sell. You either win or you lose. Okay, so we've got to stop doing this. But if we don't understand why this happens, we can't move on to the next one. Okay, and it's equally important as well is that you understand why you win as well. I know I'm talking about losing here because this is what we're trying to stop, but it's the same reason with winning. You've got to understand why you're winning. Okay, and again, it's you've got to treat them exactly the same. When the market is in the opposite direction, do you wait till it is stop loss, or do you reanalyze and close the order? Libongo. I tend to trade set and forget, and that's what I'm going to talk about now. I have different systems where sometimes I do close it before it gets to its stop loss. It hasn't actually absolutely moved around, but let's just keep on to that's what I really wanted to say. So, three key criteria you always got to focus. You've got to know yourself. I've mentioned more than once, and I'll keep mentioning it. You've got to understand your belief pattern, because again, we're all different. Second one is absolutely key. This idea of risk management is vital, absolutely vital. And for me, it's the most important. I must have spoken to thousands of traders over the years, and the same thing comes up all the time. It's about risk, money management, trade size. They risk too much. I ask traders, those of you that have been, let me just ask you guys out there that have been trading for more than 3 months and are still in the game. What would has anybody got more than a year's experience that's here today? Anybody been trading for more than a year and has still got money in their account? Yes. So Bruce, tell me, what would you tell yourself now that you've learned, the one thing you would tell yourself now, and those of you that are putting in yes in here, what would you tell yourself now to the person that you were before you started trading? What's the one thing you'd tell yourself? Those of you that put yes to that question. Patience, Bruce has wrote. Yeah, patience and discipline. Somebody else has wrote discipline. Patience and risk management, CISO's wrote. Yep. Yeah. Again, you see, I spoke to thousands of people over the years, and it's the same things that come up all the time, and that's all it is. That's why I repeat this webinar every 2 months. I repeat it at the seminars. I repeat very very similar things. Well, this is the basics of keeping you in business. It's not the getting a system. It's not knowing when to get in, when to get out. It's knowing yourself. Absolutely key. Patience and discipline. Yeah. Can you start? I'll come on to your question, Makuba, about advantages of take profit and stop loss in a minute. Knowledge, understanding, patience. Yeah, see, it's the same words all the time. And I ask people this live in seminars, and they come up with the same answer as well. It's not that they're making it up; it's the truth. So again, I say do what is probable. It's all in the numbers, especially the percentages. So if you can think in percentages instead of dollar terms, it starts to help. Because this simple business, like I said before, if you can be successful with a $1,000 account, you can be successful with a $10,000 account, a $100,000 account, a $1 million account, because the process is exactly the same. Markets go up, markets go down, markets go sideways. You can win, you can lose. You can break even, of course, as well. You can get out flat. But anyway. So, if you can convince yourself and you can be comfortable doing it with $1,000, why can't you be comfortable and doing it with $100,000? Well, ladies and gentlemen, you can, because it's what's in between your ears, and that's all it is. But you've got to have patience, you've got to have discipline, you've got to have a system, you've got to have risk management, keep you in the game, and that's all it is. So do what's probable. If it seems probable, do it. That's what I say. If it doesn't, don't. Leave it. Wait for the next one. Audio's gone off. Hopefully the audio's no audio again. No audio. Can everybody hear me? It's just Prem LNS. I don't know who that is. Got it back. Very good. Everybody can hear. Right, I'll keep going. 34 minutes gone already. I could talk for 2 hours on this. Anyway, so knowing yourself. So I can't do this for you. You've got to look yourself in the mirror and ask yourself some things. Time frames that fit your lifestyle. So when do you want to trade? All day? You want to sit in front there trading off 5-minute candles? Are you that sort of person? Or you want to wait till the 4 hours? Or you only want to wait every 4 hours? Or have you got the patience and discipline to wait for that? Or does that fit in with your time scale? If you're working full time, you mightn't be able to look at the charts all the time. So fit it in around you. Trade when you can, not when you want to, and always be aware of the time zone changeovers. So there's some big volatility, and that's what some tools we have help you with it. So obviously, as London and Europe opens, there tends to be a big spike up in volatility. As New York opens, big spike up in volatility. But make it fit yourself. Okay, I know some of the excuse me. So when can you trade? So 2 or 3, as I say, 2 or 3 times a day, once a day, whatever. For me, it's very much about fitting it around your time scales. And some of the best traders that I know personally, and are people with certain skill sets, patience, discipline, but also some certain jobs they do. Pilots, nurses, doctors, postmen. People that deal with risk in their day-to-day life and their day-to-day job tend to make very good traders, because, as I say, it's all about risk management. If you deal with that on a daily basis in your job, you end up thinking like that when you come to the trading platform, because trading should be boring, it should be systematic. It shouldn't be it shouldn't be boring and systematic that a robot does it for you. Robots are great, computers are great for doing a lot of the crunching and the maths. But for me, I always place my own trades. Okay, so on top of that, if you're a female that's a doctor or a nurse or a pilot, you've got the added benefit of having the female approach to risk and not having to win all the time, as well as the risk in your day-to-day job. So female nurses, female pilots, female doctors make great traders. Not enough of them do it, in my view. But anyway, and it's all to do with the psychology of trading. So know yourself, timing and time frames, make it fit around you. But most importantly, to know how emotional you are. What sort of beast are you? How do you function? And there's a great book at the end I'll come on to that helps you analyze the sort of person you are. So you've got to be honest. Traders were driven by our emotions, and the two key emotions that drive the market always have and always will, the basic human feelings of fear and greed. Hope and regret other people talk about as well. I don't put a trade on and hope it wins. I don't put a trade on and regret it. It's hope and greed, it's fear and greed that drive the market. You've got to get rid of hope and regret. There's three key fears, and somebody's already touched on it a couple of times already in the question box. There's the fear of making a loss. That's normal, isn't it? You risk your money, you put the trade on, and you lose. And that nagging doubt's always in the back of your mind. The fear of missing a trade. So you've got your system, right, I'm only going to trade every hour, or I'm only going to trade every 4 hours, and everything's set up, but I was out walking the dog, I was at work when that triggered. If I'd only been watching it, I would have taken that trade, and that drives you mad as well. Just happens, you just got to get on with it. But the worst one is losing a profit. So you put your trade on, you see it go from red to green. Oh, we're in profit, we're in profit, we're in profit. And then all of a sudden it starts to turn around, so we start to move back down again. So our profit's reducing, moves to our entry price. Oh no, then it suddenly goes from green to red. We're in negative, and then all of a sudden it's got too big and we've closed it out because we haven't got a stop loss, or it's actually moved down and hit our stop loss. Take this out. That's a real killer, and that doesn't go away. None of those three things go away. Fear of making a loss, missing a trade, and losing a profit. I still get that all the time. All traders do. But you just bring it, instead of it being sat in your subconscious, the back of your head, bring it to the front of your head, make it your conscious thought, and just accept it. That's what happens. Okay? The big thing that's been drives the markets as well is greed. Look at the Bitcoin charge up. Look at the stock markets that have charged up every time they go. People hate missing out, fear of missing out, fear of FUD. Greed is good, said Gordon Gekko back in '87 and many years before that. Oh no, it's not. I said in 2000 as lots of profits were disappearing. Greed is not good. You've got to be emotionally balanced. Emotions is a killer for traders, okay? You can't get rid of them, and don't let anybody tell you that you can, because we're human beings. Don't read it or sign up for any course that says I can get rid of all your emotions in trading. You can't do that. You just got to be honest with yourself. You've got to try and control them and make them conscious thought instead of it sitting back in the back of your head. Lebongo, no it isn't. Is it advised to quit your day job to become a full-time trader, or does it have dependencies? As I see, trading needs time for analysis. Lebongo, as I say, no, don't quit your full-time job. Absolutely not. No, it puts far too much pressure on you to generate an income. To try and do that. Learn to do this. If you haven't got the cash to do it, learn to do it with a demo account, because the principles are exactly the same. Obviously, the issue with a demo account is that you're not using real money, so your psychology is different. So you need to use real money as quickly as you can. But the process of learning how to trade, the indicators and the MT4 platform, you can do that with a demo account. That's what a demo account's all about. But you need to use real money as soon as possible. You need to use the numbers I'm going to talk about in a minute as soon as possible as well. So for me, this is only my own personal view. For me, longer time frames mean less emotion, mean better decisions. And that's why when I trade my own money, I trade at the end of the day, because I'm here working most of the day, or most days, and I just have a little system. I run a little analyzer. It tells me yes, no, maybe, and then I'd make the decision at sort of late at night, and I'll go through what I do another time frame. But why not learn with a? You can learn with a small account. That's a small account is great, but you've got to be able to realize the leverage, realize you should only be trading micro lots if you've only got a very small account. Most people haven't got the patience and discipline to do that. They'll end up pressing 1.0 instead of 0.1 and end up blowing their account. Can we purchase that system? No, it's my it's my own approach, but I can show you how it works and the principles of it. Because remember, purchasing systems or relying on somebody else, whether they're robots, people you don't actually learn anything, because eventually all these people disappear. Okay, and what I'm trying to say to you is this is a skill you can have for the rest of your life. It didn't come to me full time till I was in my mid-30s. We had an epiphany moment as a family, and I've been enjoying it, successful for 20 years. A lot of you are much younger than that. The beauty of the internet and the beauty of trading now is open to everybody and anybody. And if you can learn this, you've got it for life. You don't need to do it every single day. It's because the markets have not changed, and I'll come on to that in a minute as well later on, because the markets have never changed. But risk management is absolutely key. I call it vital for success. And these are old cliches. These are little phrases here, but they're all true. Scared money never wins. Never use money that you can't afford to lose, because that'll be nagging away at the back of your brain all the time. Never, don't borrow money off people, because again it puts pressure on you. Don't, scared money never wins. They're all familiar, they're all true, but you've got to have the PDC, as I call it. PDC, patience, discipline and control. Patience, wait for the levels, wait for the indicators, wait for the candles to close or the lines to turn. You've got to have discipline to stick to your plan, and you've got to control those emotions. So C, PDC, discipline, stick to your plan, patience, discipline and control. Fear, greed, they're the two key things that drive the markets. Eliminate hope and desire. You don't put a trade on and hope it wins. You don't desire what somebody else has got. You go out and work for it. You understand some approaches, and over time they will, if it works for you, it'll fit into your time scale. So how do we do this? How do we do patience, discipline and control? Most of us by default are not patient beings, because we're human beings. I call it the 1% rule. It's not my 1% rule. You'll see this written all over the press, but it's a great simple rule, okay? And it reduces the fear, reduces the greed, keeps you in business, keeps you learning with real money. Yes, of course you can, Ardeliana. You can have a demo account and live accounts. I think you have up to 5 live accounts at any one time. Speak to your account manager about this. Okay, so the 1% rule, or a fixed monetary amount. What would you be comfortable with losing? That's how you've got to think. Instead of thinking about how much money am I going to win on this trade, successful traders say to themselves, and every time, and I do it as well, how much money am I prepared to lose? If you can't cope with losing more than $50, make sure that's the maximum you ever lose. But if $50 means it's 10% of your account, that's too much. So although you can cope with losing $50, if it's 10% of your account or 5% of your account, that's too much. So you've got to reduce it. So in that case, the 1% rule would mean losing $5. And then people say to me, "Oh, I can't. How are you going to get rich, Stuart, just risking 1%?" Well, trust me. Well, you don't have to trust me, you don't know me, do you? But you can, and many people do. And read any books on any website about these successful traders. Again, I'll show you some books at the end, and they all talk about, many of them talk about risk management, go on about it all the time. I bang on about it all the time. It's my key mantra, and the 1% rule works. And it's as simple as that. Let me just show you how it works, because it keeps you in the game. It keeps you, even when you lose a lot, you're still in business. So let's do an example. Okay, very simple. I'll send you the spreadsheet at the end if you want it. It's very straightforward. So let's assume our account size is 5,000. It doesn't matter what it is. It can be 500, 5,000. Doesn't matter. The numbers are the same. It's because we're thinking in probabilities, thinking in percentages, ladies and gentlemen. Think in percentage. Don't think in dollar terms. This is nothing new here. This is common sense. Simple math, simple probability. I'm not a highly educated guy, but I know what works. Okay, 1% rule. So if we have 5,000, 1% of 5,000 is 50. Hopefully everybody gets that. If we had 500, it would only be 5. So we're only going to lose. If we lose, our 1% rule says we'll only lose 50. Let's assume we do 2 trades a day. 2 trades a day mean 10 trades a week. 52 weeks a year means 520 trades a year if we trade every single day of the year. Yes? Most people don't do that. Yes? I will send you the spreadsheet. I'll show you in a minute. So let's also assume we can cope with losing 40%, or we win 60% of the time. That's pretty good going. Okay? The issue is not the winning, as I said at the beginning, it's the losing, dealing with losing 40%. Think about what you guys do. If you get 40% of whatever you do as your job wrong, would you still be in business? Would a businessman be in business if he got 40% of his trades or 40% of his deals wrong? He lost money on them. No, he probably wouldn't. Well, in this crazy business, you can be, and even as low as 50%, because it's all about this. It's all about this risk number. So this is the key one as well, the risk-reward ratio. So if we're going to accept that we're not want to lose, we're happy to lose 1% or keep it 1%. We've got to win some. So let's assume instead of losing 1, we win 1.5. So if we lose 50, it was 1%, we want to win 1.5%. So 75. Okay, simple as that. Okay, this is the key one, 1.5. Lots of, you'll see lots of people, lots of teachers, lots of saying, oh, we want a risk reward ratio of 3 to 1. That's, we won't take a trade unless it's 3 to 1. That's fine with something like stocks, but in forex, because it's so volatile, because it's so liquid, because it's you've got the opportunity all the time. You can get away with 1 to 1, 1.2, but 1.5 is great. And lots of my trades have less than a risk reward ratio of less than 1 to 1, but that's just the way my system works. But anyway, I'll come on to that at the end as well. So let's do these numbers. So if we win 60%, we win 60% of the time, and we've done 520 trades a year, we win 75. Yes, that gives us 23,400. Hopefully it's very straightforward. But we lose 40% of the time, so 40% of 520. And we agree we're only going to lose 1%, which is 50. We lose 10,400. Remember, we started with 5,000. So at the end of the year, we've made that, we've lost that. We're net 13,000 over the year. Okay? Which, although we start with 5,000, that means 13,000 is over 1,000 a month, which is over 21% per month, or 260% a year. Let that sink in a minute. I haven't made any of this up. It's as simple as that. If you can stick to this and you get that win rate, and you win 60% of your trades, and you get a risk reward ratio of 1.5. Even okay, so some say, oh well, let's reduce all this. Let's keep this as it is. That's the fix, because that's the key thing, the 1% rule. Let's reduce our win rate to half the time. So we win 5, we lose 5. And reduce our risk reward, instead of 60, make it 1.2. And we still make 50% of the 5,000 we had at the beginning of the year. So we reduce this to 50, reduce this to 1.2. We instead of making 21% a month, we make 4% a month or 50% a year. Okay, I'm literally not making out, and I'll show you the spreadsheet in a minute, and you can have the spreadsheet yourselves, and it's very very simple Excel spreadsheet. Does everybody understand that? Any questions about those simple probabilities or simple numbers? Silence. No? Okay. Where are we? I've lost track of time because I end up travelling here. So 10 minutes left, so well explained. Thank you. Okay, honestly, it's simple as that. Okay, so stick to the 1% rate. Here are some examples of what might help, and what just in a chart form. And lots of people end up on the right hand side of this chart as opposed to being on the left hand side of the chart where they should be. Okay, so hopefully you can all see that quite clearly. So risk and money management is everything, and that's why I bang on about it all the time. So 1, 2, 3, 4, 5, 6, 7 columns here. So let's just run across them quickly. So here we're risking 1%, we win 1.5%, we do the same sort of numbers, we win 60% here, and that's our 260% we've just done. Yes, everybody see that? We win 310, we lose 200, and that's our win-loss ratio. So we're up 260% at the end of the year if we stick to that. That's the one I've just done as well. So we reduce the win rate to profit per trade to 1.2%. We reduce our success ratio to 50%, risk reward ratio to 0.5, and we still make 52%. That's still a very, very good return, isn't it, when the banks are charging you for keeping your money in their banks? If you stick to this risk reward. The issue is, look, and it can go up very, very quickly. Look here, if we suddenly double our, instead of we risk 1%, we're looking at an average of 2% per trade, and we, hit our 60% win rate. 416% win rate. That's on the account premise, yes. the trade. Okay, this is again, this is just simple flat numbers. I'm not talking about compound. That's something else altogether as well, because that's the next step. I'm trying to keep this as simple as possible at the moment. Okay, and it really is, you know, it really is that simple. It's all about minimizing the risk exposure to 1% of the account size that you've got left. So you'd have to, you know, as your account went down, you'd reduce the risk per trade in monetary value, and as the account went up, you do the same thing. I'm just talking about percentages. Okay. Izzy, right, it's a very good question. How possible is it low risk on a small account? 1% of a small account would mean getting stopped out almost immediately. Well, that's the issue then. So what you do is reduce the lot size. So reduce to 0.01 of the lot size. Okay. Yes, absolutely. That's right. Yes. Sorry, Izzy. Let me answer your question. So that's the skill. That's the not the skill. That's the discipline. Okay, sticking to that 1%. So if you want to follow this, you know, I mean, you can increase this number. You know, increase it to 2 or 3%. But you know, you need to be looking to increase these as well. And again, play with it for yourself. Make it fit for yourself. If you're not comfortable with it, just bear in mind that's what you're playing with. Okay, so reduce the lot size. Get good, get consistent, then start making money. Okay, get good, get consistent, then start making money. Okay, this business is a marathon. It's not a sprint. Okay, and the only way you will get experience with it is reducing your risk, because you end up using real money. As I say, the problem is most people end up over here. They'll risk 10%, trying to make 5%. But they're only getting 4% of their trade, 40% of their trades wrong, and they're very quickly out of money. You know, big risk, big breaking of account. Even this one, this was a 90% win rate. But obviously the profits were low and the risk was high, so very quickly out of pocket. You know, I say 3%, 1 to 3 ratio. Even only getting half your trades right, you still make 500% on your return. Okay. Can I show the? I'll come on to best trading times in a minute. The best trading times are when the market's liquid. It depends on your time frame. It's time for that's a question for another. Omar, can you send me an email to webinars@forex, and I will answer all those questions, because they're different to what I haven't got time to cover all of that today, unfortunately. Okay. So if you want this spreadsheet, please let me know. I'll send it to you again. Put the question in the question box, and I'll send you it. It is that simple. It really is. And I haven't done anything about compounding or anything like that. Hopefully I answered your question. I hope that made sense. But play with it. You know, if you want to double the risk to 2%. But if you haven't got enough in your account, think about, you know, either investing more to do that. Make sure it's a comfortable factor. Or you don't take the trades. The trade's too far away, but you still write them all down. And come along, next slide. And just, you know, wait till the next one comes along that does fit in with your account. Noranish, $50. It's very difficult. No, you can't really, to be honest. To do that one, you can't do the 1% rule, because you won't have enough. But again, by asking that question, Norris, you need to go and have a look at the video of understanding about leverage and margin and lot size. Okay, you've got to understand those lot sizes. So that's what 0.01 is all about. Okay. The moment I enter reverse is on me. It's so lots of questions coming here. Just bear with me a second, please. Sorry, just when the market's going in the opposite direction. Yeah, the real issue is there's no certain strategy or exact parameters. Well, all the questions are all packed up here. Yeah, I'll send it. Everybody who wants a spreadsheet, you'll get the spreadsheet. Don't worry. Yes, it's clear. Good. Is it possible to make a session on calculating pip value of standard account, cent account, and mini account, please? Because our actual problem is this. It will help you make an Excel spreadsheet of pip value too. Thanks. Okay. Yeah. We can do that as well. There's a Shazad, there's a little. Hopefully I'll get onto that. There's a pip calculator. Let me show you how we do that. Please share a spreadsheet. Yes, of course I will. So risk, money management, absolutely everything. It's fundamental, and hopefully that made sense. I mean, there's lots of other things that make successful traders, but the risk management, the numbers, the probabilities, percentages, absolutely vital. Technicals help, the sentiment, the mood of the market, the fundamentals. Timing is an art and a skill, but by most way, this one is absolutely key. All about risk management, all about probabilities, absolutely vital for success. And really, that's what we're here for. Okay, we're here to help. We have lots and lots of education. We've got these webinars. We've got lots and lots of videos, lots of recorded videos. It's educational stuff, ebooks you can download. These are all here on our website. Where the video tutorials there. This is the one I was talking about. This is on our this one here. This is the YouTube link, but it's on our video homepage as well. And there's lots more I could talk about on this particular subject, but we're here to help. On an analysis page, everything's written up on there. Andrea's missing off there. Sorry, Andrea. And that's written up every day. The stuff up on there. Facebook. Friend me there. There's stuff put up on there all the time as well. It's copied there. Intraday stuff's put up there. Webinars, we have them at least 3 times a week. This is obviously an old one. I'll show you the ones that are coming tomorrow. And come and see us. We're coming down to South Africa, Southern Africa next month. We got a webinar in Johannesburg on the 17th. We got webinars in Port Harcourt was last weekend. Lagos on the 10th. Abuja I'll be at on the 24th. I'll be at Johannesburg, Abuja and Nairobi. I'm not going to be at Lagos unfortunately, but Johannesburg on the 17th, Nairobi on Monday the 19th, and Abuja on the 23rd. So come along. We're here to help. Meet me, meet us, and we really want you to be successful, because that's what we're here for. You're successful, we're successful. Tomorrow, Bollinger Band. Yes, they do work. Live analysis every Tuesday. See the live charts live, and end of the month, Andrew's going to go run through auto charts. Another great tool that we've got to help you be a successful trader. Do you know where in Johannesburg we'll be? It's going to be at the Standen Conference Centre. Lagos was the 10th, wasn't it? I've been to Lagos before. I've been to Lagos twice actually. That's our office in Lagos. I've been to Lagos a few times, but I'm not actually going to be at the seminar on the 10th. In Lagos, but I will be. Yes, I'll send you the landing page if you want to register for the Johannesburg one. Mutagua, yeah, certainly, of course. Okay. So thank you for today. I've sort of run out of time again as usual, but hopefully it was useful. It's fundamental, this idea about knowing yourself, risk management, and minimizing your risk. Okay. I know it might sound difficult and you can't trade and all the rest of it, but it keeps you in business. So you either think about reducing your lot size significantly to 0.01, and if you haven't got enough money to do the 1% or the 2% rule when you've only got 1%, with a small account, think about saving up some more and putting it in, or try it with a demo account. Again, if you're new, 2 vital books. Edwin Laver's The Reminiscences of a Stock Operator, over 90 years old now, absolutely fundamental to the mindset of fear and greed and what the markets do. Free you can Google it, free as a PDF download if you want to. The other key one, if it's this mindset thing. This is a great book. Mark Douglas's Trading in the Zone. He's written lots of books. It's all about trading psychology. A bit dry, but they work very, very fun. Very great little a questionnaire at the back of the Trading in the Zone book, and it does focus, makes your mind focus on what you need to learn. Okay, so. And it's fundamental. Alexander Elder and Van Tharp are both great teachers of traders, particularly commodities and equities. Jack Schwager's written some great books, the Market Wizard series, all about multi-billionaires, guys that have started off with tens of thousands of dollars sometimes, or just a few $1,000s, and turned it into billions, literally. And these are real people doing it with real money and their experience, and you'll see the things I've said today, you'll see that repeated many times throughout these books as well. He's written a new one about the hedge funds. He's brought it right up to date. Really great set of books. Jack Schwager, he's still a teacher and trader himself now as well. A lot of these guys all trade as well. Obviously, Benjamin Graham is the backbone of what Warren Buffett uses, long-term investment, and Dr. Ben. Anna Cooling, if you're brand new to trading, Forex trading in particular, Anna Cooling wrote a great book a few years ago called Forex for Beginners, which covers a lot of the basics I've talked about in the past. I've talked about in the past as well. And she's a big volume trader as well. She uses volume to trade as well. And a very good teacher. Her and her husband David, she's got her own website, annacooling.com as well. Yeah, very good trader there. And anyway, I've dribbled on over the hour. I know I started a bit late, but so let's just run through some of these final questions here. Anthony's asking, tried to register for the Nairobi but didn't get an email back. I'll check that out, Anthony. I'll find out that for you. Okay. Thank you for that, Bruce. We expected the webinar to discuss market mind games. The opposition perhaps call this one mindset instead of mind game. Okay, fair comment. The reason I call it mind games is that that's you're fighting your own mind. That's what I'm saying. Your mind is designed to protect you, to run away. That's why you get the adrenaline running. So it's mind games, mindset. Okay, fair comment. But that's really is. Remember, you're not fighting the market. You're not taking the market on. It's you're taking on. Okay, because the market does what it does. The market doesn't know, for instance, where you've entered your trade, doesn't know where your stop loss is, doesn't know where your take profit, doesn't care. We're the minutiae in this whole thing. Remember, there's billions of dollars, $5 billion, trillion dollars, not billion dollars, $5 trillion traded every single day in the Forex market. We as retail traders are very much the minutiae, the very small plankton in the sea of the trading world. I don't trail my stop loss. It's not something I've done. I know many people that are successful do it. It's just I tend to be a set and forget trader certainly on the daily time frames. But and I have a very simple 1 hour approach as well, which works fairly well as well. What was that you said about Nairobi? I'm going to be in Nairobi, or we are going to be in Nairobi on the there we go, Monday the 19th of March in I can't remember the hotel, but if you I'll send you the there's a landing page so you can register for that as well. I know it's filling up very quickly, Nairobi, so you need to register as well, Charles. Okay, thank you for your time, everybody. So I could have talked for another hour or so on this easily, because it's one of my passions and it's a real mantra that I go on about. So there you go, and these are some quotes from the magic Jesse Livermore. So thank you very much for your time. Email me at webinars.forex. Join me at Stuart Forex Cowell on Facebook if you want to see what we're doing during the day, and absolutely happy trading to you all as well. Okay, take care. Thanks for your time. Bye bye.